Welcome back to the AG Insider. This is Captain Silver, and if you spent any time today watching the Western financial media cover the massive $3 trillion paper wipeout in the stock market, if you were distracted by the algorithmic spoofing and the leverage liquidations and the margin call circus, then you completely missed the single most important development in the precious metals market. While Wall Street was playing their paper games, while JP Morgan was suppressing the silver price with naked shorts and derivatives, China just initiated the final drain on the COMEX silver vaults. This is not a drill. This is not speculation. This is happening right now in March of 2026, and the math is absolutely terrifying. The Shanghai Gold Exchange just changed the rules of the game, and they are demanding physical delivery of silver in quantities that the COMEX cannot possibly satisfy. The wealth transfer from west to east is not coming. It is here. It is happening right now. And if you are still trusting Western paper derivatives, if you are still holding ETFs and futures contracts instead of physical metal, you are about to learn a very expensive lesson about the difference between owning an asset and owning a promise of an asset. The suits want me to tell you this is not financial advice, and they are absolutely right. This is not financial advice. This is an emergency warning that the entire Western precious metals pricing system is about to collapse under the weight of Eastern physical demand. Let me know in the comments below because I need to hear from this community right now. Are you trusting Western paper derivatives at this moment? Are you holding shares of SLV or futures contracts on the COMEX and hoping that those paper promises are going to protect your wealth? Or are you stacking physical metal like the Eastern central banks? Like China? Like the smart money that understands the difference between paper games and physical reality? Drop a comment right now. Tell me what you are holding. Tell me if you understand what is about to happen to the COMEX, because your answer is going to determine whether you survive the greatest commodity default in modern financial history or whether you get trapped on the wrong side of the trade when the system breaks. Now let me break down the mechanism of what is happening right now, and I want you to pay very close attention to the numbers because the numbers do not lie, and the numbers are absolutely screaming that we are on the verge of a catastrophic failure in the Western precious metals market. Wall Street, and specifically JP Morgan, has been suppressing the price of silver for decades using paper derivatives. This is not conspiracy theory. This is documented fact. They have paid fines for spoofing. They have admitted to manipulation. The playbook is simple. When the price of silver starts to rise, when physical demand starts to push the price higher, JP Morgan and the other bullion banks flood the futures market with naked short contracts. These are paper contracts that are not backed by physical metal. They're just promises to deliver silver at a certain price. And because the COMEX allows cash settlement, because most futures contracts never result in physical delivery, the banks can create unlimited paper supply to suppress the price. This has worked for years, for decades. Every time silver tries to break out, every time retail investors start buying, every time industrial demand starts to overwhelm supply, the banks step in with their paper shorts and crush the rally. They did it in 2011 when silver hit $49. They did it in 2020 when silver tried to break 30. They've done it over and over again. And the reason it works is because most market participants are playing the paper game. Most traders are buying and selling futures contracts. Most investors are buying ETFs. Very few people are actually demanding physical delivery. So the banks can maintain this fiction that there is unlimited silver supply because nobody is calling their bluff. But China just called their bluff. The Shanghai Gold Exchange, which is now the largest physical precious metals exchange in the world, just changed their settlement rules. They are no longer accepting cash settlement. They're demanding physical delivery. And they're not just demanding small amounts. They are demanding massive quantities of physical silver to satisfy their industrial demand, their monetary reserve demand, their strategic stockpiling programs. China is the world's largest manufacturer of solar panels. China is the world's largest manufacturer of electric vehicles. China is building the most advanced 5G network on the planet. All of these industries are silver intensive. All of these industries require physical metal, not paper promises. And China has decided that they are no longer going to pay inflated prices to Western refiners and Western dealers. They are going to go directly to the source. They are going to demand delivery from the COMEX. Now here's where the math gets absolutely terrifying. And this is the part that the mainstream financial media will never report, because if they report this, if they actually explain what is happening, the entire COMEX system collapses immediately. The COMEX has 429 million ounces of silver in open interest. That means there are paper contracts outstanding that represent claims on 429 million ounces of physical silver. But here's the problem. The COMEX only has 85 million ounces of registered physical silver in their vaults. Registered silver is silver that is available for delivery against futures contracts. That is the physical metal that is supposed to back the paper claims. Do that math. 429 million ounces of paper claims, 85 million ounces of physical metal. That is a ratio of over 5-to-1. For every ounce of physical silver in the COMEX vaults, there are more than 5 paper claims on that same ounce. This is fractional reserve banking applied to precious metals. This is the exact same scam that banks run with fiat currency, where they lend out $10 for every $1 of deposits they actually have. And it works great as long as everyone does not try to withdraw their money at the same time. But what happens when everyone shows up at the bank and demands their deposits? The bank fails. The system collapses. This is called a bank run. And that is exactly what China is doing to the COMEX right now. They are initiating a silver bank run. They are demanding physical delivery in quantities that exceed the available registered inventory. And the COMEX cannot say no, because if they default on delivery, if they refuse to honor their futures contracts, the entire credibility of the exchange evaporates. Nobody will ever trade COMEX futures again if the exchange can just arbitrarily decide not to deliver the metal. So the COMEX is trapped. They have to deliver. But they do not have enough metal to deliver. So what are they doing? They are desperately trying to convince holders of eligible silver, which is silver stored in COMEX vaults but not available for delivery, to convert their eligible silver to registered so it can be delivered against contracts. But here is the problem with that strategy. The people who own eligible silver, the people who have physical metal stored in COMEX vaults, they are not stupid. They can see what is happening. They can see the massive short position. They can see the Eastern demand. They can see the inventory drain. And they know that if they convert their silver to registered and allow it to be delivered to China, they are never getting that metal back. So they are not converting. They are holding. They are waiting for the price to explode. Because they understand that when the COMEX runs out of registered silver, when China demands delivery and there is no metal left to deliver, the price of silver is going to gap up in a way that makes every historical rally look like a minor blip. This is the arbitrage that China is exploiting. They can see that the paper price of silver on the COMEX is being artificially suppressed by JP Morgan and the other bullion banks. They can see that the physical price of silver in Shanghai is trading at a significant premium to COMEX. They can see that there is not enough physical metal in the COMEX vaults to satisfy the outstanding paper claims. So what do? They buy the cheap paper contracts on the COMEX. They stand for delivery, and they force the COMEX to give them physical metal at the artificially suppressed paper price. Then they ship that metal to Shanghai where they can sell it at a premium, or more likely, they just hold it as a strategic reserve because they know that silver is going to be worth significantly more in the future. This is wealth transfer. This is tangible wealth moving from west to east. This is the United States and Europe losing their physical precious metals reserves to China because Wall Street was too arrogant and too greedy to stop playing their paper manipulation games. And the most infuriating part is that this is completely self-inflicted. If JP Morgan had just let the price of silver rise naturally based on supply and demand, if they had not spent decades suppressing the price with naked shorts, China would not have this arbitrage opportunity. The price would be higher, the Eastern demand would be more expensive to satisfy, and the COMEX would not be on the verge of default. But they got greedy. They wanted to maintain control. They wanted to keep silver cheap so their industrial clients could buy it at a discount. And now they are trapped. They are trapped in a massive short position that they cannot cover without causing the price to explode, and they are facing relentless physical demand from the East that is draining their vaults.
The mainstream financial media will never report this physical drain, because if they report it, if they explain to the average investor that the COMEX is running out of silver, that China is demanding delivery, that the entire paper pricing system is on the verge of collapse, there will be a panic. Retail investors will rush to buy physical silver. Industrial users will start hoarding. The premiums will explode, and the price will go vertical, so the media stays silent. Bloomberg does not cover it. CNBC does not cover it. The Wall Street Journal does not cover it. They talk about everything else. They talk about the stock market. They talk about the dollar. They talk about treasury yields. But they do not talk about the fact that the COMEX silver vaults are being systematically drained by Eastern demand. If this independent research helps you understand what is really happening, if it helps you position yourself ahead of the COMEX default, then consider hitting that super thanks button below to support the channel. This is how I keep doing this work. This is how I justify spending 12 hours a day tracking vault inventories and Shanghai premiums and COMEX delivery data. Your support makes this possible. Now let me give you the action plan, because understanding the problem is only useful if you know what to do about it. The era of paper silver is dead. It is over. It does not matter if you do not believe me. It does not matter if you think the COMEX can magically find more silver somewhere. The math does not work. 429 million ounces of paper claims, 85 million ounces of registered physical. That is not sustainable. That is not fixable. The only question is how long the COMEX can keep the charade going before they run out of metal and default. If you own paper silver, if you own SLV, if you own futures contracts, you need to understand that you do not own silver. You own a claim on silver. You own a promise that someone is going to give you silver at some point in the future if you ask for it. But what happens when everyone asks for it at the same time there is not enough to go around? Your claim becomes worthless. Your paper contract gets settled in cash at the manipulated paper price, and you miss the entire rally as the physical price disconnects and goes vertical. The only way to survive the Shanghai drain is to take physical possession of your silver before the COMEX defaults. Buy physical coins. Buy physical bars. Take delivery. Store it yourself, or store it in a private vault outside the banking system. Do not trust the COMEX. Do not trust SLV. Do not trust any paper promise that says you own silver when you do not actually have the metal in your hands. Because when the system breaks, when China drains the last ounce of registered silver from the COMEX vaults, the people holding physical metal are going to be on the right side of the greatest commodity short squeeze in history, and the people holding paper promises are going to be left with nothing. Look at what is happening right now. The registered silver inventory at the COMEX has been declining for months. It is at multi-year lows. The Shanghai premium, the difference between the physical price in China and the paper price on the COMEX, is widening. That premium is telling you that physical silver is more valuable in the East than the paper price suggests. That is the market screaming at you that the COMEX price is fake. That is the arbitrage that China is exploiting. And every single day, more silver flows from west to east. Every single day, the COMEX vaults get lighter. Every single day, we get closer to the moment when someone stands for delivery and the COMEX has to admit they do not have the metal. I'm going to be tracking the COMEX registered inventory numbers and the Shanghai premiums every single day. This is the most important data in the precious metals market right now. This is the data that tells you how close we are to the default. This is the data that tells you how fast the physical supply is being drained. Make sure you are subscribed to this channel with the bell notification turned on so you do not miss the vault depletion updates. When the registered inventory drops below 50 million ounces, when it drops below 25 million, when we get to single-digit millions of ounces left in the COMEX vaults, I'm going to be putting out emergency videos immediately. You need to be positioned before that happens. You need to own physical metal before the rest of the market wakes up to what China is doing. Here is the bottom line. And this is the reality that every precious metals investor needs to understand. The wealth transfer from west to east is accelerating. It is not a future event. It is happening right now. Every ounce of silver that leaves a COMEX vault and gets shipped to Shanghai is an ounce of tangible wealth moving from the United States to China. Every paper contract that gets settled in cash instead of physical delivery is a missed opportunity to own real wealth. Every day that you hold paper promises instead of physical metal is a day that you are on the wrong side of the greatest arbitrage trade in commodity market history. China understands this. Russia understands this. The Eastern central banks understand this. That is why they are demanding physical delivery. That is why they are draining the COMEX. That is why they are building strategic reserves of silver and gold while the West trades paper derivatives. They know that in the next monetary system in the post-dollar world, the countries that hold physical assets are going to have power and the countries that hold paper promises are going to have nothing. The COMEX cannot survive this. The math does not work. You cannot have 5 paper claims for every physical ounce and expect the system to hold together when the largest buyer in the world starts demanding delivery. Something has to give. Either the price has to go vertical to choke off demand and attract new supply, or the COMEX has to default on delivery and admit that they cannot honor their contracts. Either way, the people holding physical silver win and the people holding paper promises lose. I just posted the exact physical silver products I am buying right now to front-run the Chinese demand to my private community. I broke down the specific coins and bars I am accumulating, I explained my storage strategy, I showed the math on Shanghai premiums and how to calculate the arbitrage. I gave my timeline for when I expect the COMEX registered inventory to hit critical levels. If you want to see exactly how Captain Silver is positioning for the Shanghai drain, if you want access to the daily vault tracking reports, if you want to be part of a community that understands the difference between paper games and physical wealth, click the join button below and become an insider member right now. The people who join today are going to have front row seats to the greatest commodity default in modern history. Do not get trapped holding paper promises when the COMEX breaks. The only silver that matters is the silver you can hold in your hands. Make sure you are stacked before China drains the last ounce from the Western vaults. I will see you in the next video when we update the registered inventory numbers and track the final stages of the COMEX collapse.